Orders in December are up 24% over November, but that's more like a sugar rush than a trend. And we'll tell you more about that in just a moment. Hi, I'm Pat McGibbon. I'm here to talk about the U.S. Manufacturing Technology Orders Report for December. December was wonderful. It was up $404 million relative to November. That's 24% increase. Year to date, total orders for 2019 were $4.5 billion. That's down 17% relative to 2018, and that's 3 points better than what we were saying at the beginning of 2019 when we thought it was going to be around a 20% decline. Looking around the country, the West did pretty well. Relative to the rest of the nation, they only fell 10%. And what helped them do that? Well, the aerospace industry was fairly strong at the beginning of the year, helped keeping it up above the 7% decline rate. And then at the end of the year, fabrication, particularly sheet metal, job shops, and the auto industry helped bring back up some of the numbers. So it only ended up the year 10% down relative to the national number of 17. On the flip side, the North Central West was the hardest hit, down 29% relative to 2018. Medical equipment did very, very well, and the small electronics did as well. But they couldn't offset the big declines in areas like mining equipment, off-road and highway construction equipment that fell significantly as far as the orders in that particular region. So why was December so wonderful? A $404 million order month, a lot better than what we expected. Well, I believe it has to do with the necessity to buy equipment, and that some of the larger manufacturers in the United States, particularly first and second tier suppliers to a variety of different industries, overreacted to what was going on in the economy. Their lack of confidence had them overestimate a decline in manufacturing that didn't occur. Manufacturing shipments actually grew by 1% in 2019 over 2018 manufacturing level that drove a really nice growth in investment in capital equipment. So as we got towards the end of the year, it's my supposition that the larger manufacturer says, I can't continue to produce what I need to make my customers happy unless I make further investments. But this is a short-term issue. It's going to be a correction to how much they didn't spend the fourth quarter of 2019. It's not going to have a great deal of impact, I don't think, on the beginning of 2020. We still see that 2020 will, year on year, 2020 over 2019, continue to fall a bit in January, February, all the way into probably April and May, with a turnaround in either May or June expected. The forecasts we heard at IMTS workshop and later in the week from our consultants at Oxford Economics suggest that the year is going to be relatively flat and maybe a little bit up. And unfortunately, it's not going to be economics that drives it. It's probably going to be more about politics and trade policy. Any kind of a change in our situation with China would make a big change in what happens with respect to investment. Just the truce we called, which didn't lower tariffs at all, just said we're not going to add anymore, had a really positive impact on the stock market and probably had a little bit to do with the additional investment that people made in December. On top of that, manufacturing shipments not only being up 1%, but we've seen some other really good indicators in the latter part of 2019 and here at the beginning of 2020. For example, the Purchasing Managers Index is back above the 50 line. Now, if you don't know what that means anything above 50 is an expansion in manufacturing. And at 50.9, first time it's been up that high since back in the summer of 2019. And the Gartner Business Index, which is even more specific to our particular issue here, manufacturing technology orders, grew for the first time in 7 months, going back to 49.6, just below that 50 baseline that suggests expansion. So while the 49.6 suggests either stability or a little bit of a contraction, we are on a trend there towards crossing the 50 line and getting into some type of growth. But when it occurs, it won't mean an instant growth. Typically, this leads by about 6 months, which again puts us out there in that May, June timeframe for a turnaround in manufacturing technology orders. So until then, enjoy the warm weather. And when the weather really warms up in June, we probably see the market warm up just as well. Take care.